Silver investors could make a fortune. Billionaire Eric Sprott and other top gold analysts predict that silver will dramatically outperform the yellow metal. In order to maximize your exposure to silver, consider shares of Golden Arrow Resources trading on the TSX Venture under GRG and the US as GARWF, where insiders have accumulated 50% of the company, and billion-dollar giant Silver Standard Resources has taken an 8% stake in the company. This company has 250 million ounces of silver resources and is headed up by the one man who's responsible for the largest silver deposit discovery in history. Learn more at futuremoneytrends.com/silver100. Greetings and thank you for joining us at futuremoneytrends.com. I have our most popular guest. It's undeniable. You look at the views, you look at the traffic and all the comments. You guys love this guy, and I love him very much too. And we're actually going to be together in Houston. If you guys want to hang out with Andy Hoffman and I of Miles Franklin, May 20th, which is in 8 days, or maybe 7 days when you're listening to this podcast. No strings attached. We don't have any books or CDs to sell you or wealth coach programs. This is just a free event. It's a precious metal question and answer session, 6:30 to 10 o'clock at the Houston Marriott West Loop, right in the Galleria. I look forward to seeing everybody there. And by the way, we say 6:30 to 10, but what we really mean 6:30 to when everybody's ready to go. We'll be there the whole night. Andy Hoffman, thank you so much for joining us.
And thank you, as always, for having me. I can't believe that we're already up to this event. You know, I remember we did the first one in Denver back in January, and here we are doing our event in late May, and I think it's going to be fantastic, and I look forward to doing it with you.
Yeah, we're going to have a lot of fun. I look forward to meeting subscribers and different listeners. So May 20th, please, everybody, email Andy at ahoffman@milesfranklin.com, and you can sign up free, no strings attached. If you guys are close to Chicago in June 24th, they will also have an event there. But I will be in Houston, so I look forward to meeting all my fellow Texans. Andy, I wanted to start off with a conversation I've been recently having with a few other people, and that's with the negative interest rates. And the negative interest rates, because we're seeing, obviously, dividends, are being slashed over, 400 companies last year. We're at like 220 this year. Bond yields, of course. And, negative interest rates could be deflationary in the sense that liquidity is drying up, but extremely, extremely bullish for gold, because you look at these family offices with 50 million plus management. Even a small movement out of these, negative interest rate type, accounts and into gold. This could be negative interest rates could be both deflationary and the most bullish thing to ever happen for gold. Is that the case? Is that possible, or am I way off?
No, you're right on. In fact, when I think of, quote, negative interest rates, I think of in Revenge of the Sith, when the Chancellor's talking to Anakin, and he's saying that, a lot of people think some of the ways of the Sith are unnatural. And, there's nothing more unnatural than negative interest rates. There really should theoretically be no such thing. Why would you pay someone to lend you money? That makes no sense at all. And in fact, to this day, as I see, the European bank and the Japanese bank and others doing it, you're going, do they really actually think that there's some positive to be gained? Is there anyone actually on Wall Street or on CNBC or in Washington or anywhere who actually thinks that somehow something good will come out of this? It doesn't even make sense. It's so ridiculous. And of course, from a precious metals perspective, it's beyond bullish, because we talk about all the myths. You can't eat gold and all kinds of stuff like that. One of my favorites is, well, it doesn't yield anything, so you can't buy it, as if people have never invested in anything in the world that doesn't have a yield. And in this case, actually, plain old inert gold and silver, just sitting there doing nothing, actually yield more than bonds. And the fact is, it's not just, one little class of bonds. There are now $10 trillion of sovereign bonds trading at negative rates around the world. In fact, it was so shocking because I remember just a few weeks ago they said, oh my God, it's up to 7.8. And then 2 weeks ago, another article, they're up to 9.9 trillion. And I see rates have fallen since. So it could be 10, 11, 12 trillion by now. And you see the rates over here in the States are now plummeting after last week's NFP Farms report that made the odds of a Fed rate hike this year now zero. So people are anticipating negative rates here. I mean, they're going to happen because that's all the Fed has left is print money and push rates lower because they think it'll make the stock market go higher. But the fact is, there is nothing more unnatural, a precious metal bullish, and there is nothing that screams a clarion call that the end of the fiat currency regime is upon us.
Yeah, it really is funny. Why would anybody ever do this? It just boggles the mind. And how in the hell do you unwind that position if the central banks can't even unwind 0 to 1%? They cannot unwind this. There's no going back. Last time you were on the show, we talked about Stanley Druckenmiller. He's got incredible returns. He just completely crushes Warren Buffett's over the last 3 decades, although all of these guys have struggled for the past 7 years. However, with that said, last time you were on the show, we talked about how he went from 0 to 30% position in his portfolio for gold. And I just saw, I think it was on yesterday on Zero Hedge in Bloomberg, Carl Icahn is now 149% net short. For the audience, basically his short position is now 150% bigger than his long position. Andy, I think that's significant. What are your thoughts? I mean, you got guys like Carl Icahn and Stanley Druckenmiller. They're doing these are drastic things that they're doing, dramatic changes to their portfolios.
Okay, well, first of all, no offense, I couldn't give a flying F about either of those people or anyone else. The fact that someone had good returns as a hedge fund manager at some point in the past doesn't mean they'll have good returns in the future. And there are plenty of other of these guys we can single out who did great and did poorly. And frankly, I'll bet you if you looked at Stanley Druckenmiller or Carl Icahn's returns, you'd see plenty of bad years also. And Carl Icahn, he's just a guy who basically is into this whole, shareholder activism now, where he just, he's basically a hanger-on to the cartel. And, when they go off that, because right now the PPT is still there doing their thing. And if he's going to go against them, there's a good chance he's going to get his head handed to him. So again, I don't really care about any of these guys. Look, I wrote an article 4 years ago called Hedge Bombs. I mean, I worked in the hedge fund industry. I understand what a ridiculous, value proposition it is. These guys are all losing money. They're going out of business left and right. So why do I care what hedge fund managers are doing? That said, in relation to precious metals, what I've been talking about all year long is the dramatic increase in institutional investment in precious metals that we haven't seen for years. I mean, the fact that there's big buying of the mining stocks after all these years, and the premiums on the closed-end funds have gone positive. You saw PSLV did their deal. Now PHYS, the gold fund, has a nearly 2% premium, which means they'll be likely to do a deal soon. And of course, the ETFs have had big inflows, the GLDs, the SLVs, and all the others. So it's very significant. Heck, I mean, Goldman Sachs and JP Morgan, Goldman Sachs covered their gold short yesterday, and I wrote a whole article today about how JP Morgan is now saying that this is a big bull market in gold. So again, institutionally, you're seeing people realize that, yes, we are in a bull market and we better be on the right side of this. And yes, there are going to be some people used as symbols like Stanley Druckenmiller. I mean, I don't know what Stanley Druckenmiller has done every year for the last 20 years. He's probably better than most, but I don't care. But the point is, institutional investment is increasing in the sector, and it's for good reason, because we are now in a bull market. Yeah,
certainly. And I guess my point more was to bring those people up, like Ray Dalio as well, is just the fact that you just don't see these mainstream guys coming out like this. And it's very interesting because not only are they saying this, but they're backing it up with their dollars as well. Andy, when it comes to the middle class, you've really kept track of this. It's really a sad story. With my own letter, I've done everything I can to try to help people, really look in the mirror for their answers, and not, to the government or to any business or even a newsletter. But the middle class, it's just story after story. This morning on Drudge Report, it was talking about how Lunar Homes is now planning and building model homes with multi-generational houses so that grandma and grandpa can live there, but the young millennials can live there as well. And I know you've been keeping track of this. What state is the middle class in? I mean, is there any hope to turn this around?
No, there is no hope to turn it around because we're in the midst of the biggest financial crash of all time, the biggest economic crash. And the root of it, of course, is all the money that was printed, creating the great deformation of economic activity and monetary policy that has put us in this position today. I mean, the debt is going to all be wiped out. Heck, Donald Trump, idiot, was on TV telling CNBC about his plans to renegotiate debt as if it's some private business deal. He's talking about U.S. Treasuries here. Yeah, of course we're going to have to default on everything. And as for the millennials, look, they've been saddled with more debt. The United States millennials, let alone everyone else in the world, have been saddled with more debt that they can't pay than any in the history of mankind. So yeah, of course they're going to have to go and live at home because there's no jobs out there, and they have all this student loan debt the government pushed on them for worthless degrees that they can never pay back. So, I mean, there's nothing wrong with living at home or these kind of things, or living, like the people throughout history have. The problem is because the United States dollar has been artificially supported by the fiat currency regime, the reserve currency status that we've abused for so many years, the United States is living more above its means than any culture in the history of mankind. So when we fall back, even if we just fall back to the mean, a mean reversion, let alone the usual falling back, to well below, the violent kickback, you're going to see dramatic declines in the standard of living for many people, and no one is more in the dead center of that target than millennials who never had a chance.
Yeah, and speaking of Donald Trump, maybe it's not a good idea for a presidential candidate or a president to openly talk about that. But I think what he was saying, it was basically the truth slipping out. I mean, the fact is he knows we're going to have to renegotiate the debt or do something about it, whether they, I think he's obviously followed up with they just print their way out of the debt, which we know where that goes. But I think Donald Trump, in a way, maybe it wasn't the most articulate way to put it, or the way it's going to happen, but he was being very honest. The fact of the matter is the debt is unpayable, right?
Oh, absolutely. But what I'm trying to say here is it's not like he was trying to be honest. He was trying to say, look, there's a problem, we have to address it. He was essentially saying, there's nothing could go wrong here in the United States. We're in control. Don't worry. Everything is good. Because me, the big private businessman who knows how to renegotiate, I know how to deal with these people. I dealt with people in real estate court. I can deal with the Chinese and the Japanese. I'll just walk up to them and tell them I'm only paying them 50 cents on the dollar and they could take it or leave it because I'm Donald Trump. That's what he's saying. He doesn't realize you can't speak like that when you have the world's most overvalued currency and you're the world's biggest debtor. And the entire global monetary system relies on the full faith and full faith and forget what the thing is.
Credit for the United States.
Yeah, full faith and credit of the United States government. He's basically saying we're going to default on our debt. F you to everybody. Do you know what that would actually do to the United States? I said in a podcast yesterday, I said that would be a bigger global event than dropping the bomb on Hiroshima. If we actually went up to the Chinese and said, guess what? We're not going to pay you. And by the way, the funny thing is, it's not the Chinese that own most of the debt. It's the Fed that owns most of the debt. Fed owns most of the long-term debt because of Operation Twist and the QE. And I actually had someone call me up on one of these podcasts and say, well, maybe they should just default on the Fed. I'm going, no, but the Fed's balance sheet is their balance sheet. That would be like Yum Brands saying, we're not going to pay our intercompany payables to Kentucky Fried Chicken and Pizza. Of course they're going to have to pay. The point is, Donald Trump doesn't realize what he's saying because he's not trying to be altruistic. He's trying to be tough. And you can't be tough when you're the biggest debtor in the world. And the entire world relies on the full faith and credit that you're going to pay people back. I mean, we have a AAA credit rating, right? It was downgraded by S&P by one notch 4 years ago when we had $5 trillion less debt than we have now. And S&P they almost put them all in jail for doing it. But the fact is, we were fighting so hard to keep that AAA rating because we said, well, we will always pay for our debt. Well, if he's out there, our president-to-be, saying, I'm going to default on the debt, what will our credit rating be? I mean, if Greece is a C or or a B minus or whatever it is, what should we be? If we tell people we are defaulting, we are a C. We are a cocoa bond.
Yeah.
And there's 19 trillion of these bonds out there, and all the other interest rates around the world depend on our interest rates. So the point is, there's nothing altruistic about what he's doing. This debt, as you say, is as unpayable as any debt in the history of mankind. It's bigger than all of the debts in the world combined. And so again, are we asking about the millennials? They're screwed. Are we asking about the monetary system? It's screwed. Are we asking about an economy that is the most oversupplied as a result of all that money printing for the past 30 years and propping up markets and manipulating and fudging economic data? Everything is going to come to a head, and I think it's coming to a head now. I've said it from the beginning of this year. I don't think we can escape this year without something absolutely horrifying occurring in the financial markets, and hopefully not outside of them as well.
Yeah, and this whole artificial bubble in the stock market, I have an email going out this morning or maybe later today, but it's basically you got a 5% upside and a 50% downside, because if you look at the buybacks, you look at the dividends, they're all being slashed. Everything that fueled this whole bubble, it's the unsustainability of it. It's reached its end in 2016, and it's all turning around. Well, hey, Andy, before we go, I want to have one more question. It's everybody's favorite metal. I want to talk about brass. No, I'm just joking. Of course, I'm not talking about brass. We're talking about silver. Yes. So silver had everybody on the edge. Looked like it was about to break out. I know you follow the price suppression in detail on a daily and an hourly basis when it comes to the precious metals. And silver, such a tiny market, very, very easy for the cartel to manipulate. But just to give people the big picture, silver in the near term right now, how does it look to you?
Well, you should have asked me right before this call, because silver was 1738 just as we started. And look at that. It's 1703 right now. And absolutely nothing has happened. It's just the exact same chart pattern as we see every day. What we're seeing now is the death throes of a cartel that is at the end of their ropes. I mean, I couldn't be more emphatic about how screwed the commercials are, not the speculators. They're the ones with the record high short position, and the only way they can make prices even move down at all is by going even deeper into that short position and making the whole world realize what's going on here. The physical demand has never been stronger in the world. I was reading an article this morning about the record North American supply deficit. Now we're at peak production as a result of all the mine shutdowns and the lack of investment we've seen in the sector for the past 15 years. And of course, where do you think they've gotten the physical supply to supply all the buying? It's been from reducing all those inventories, just taking inventories and using them all up. So we're in the perfect storm. Negative interest rates, exploding money printing. Now the Fed it can't even pretend that it's going to tighten policy. So no matter what they do, when they keep trying to smash the price here, it's only going to make the physical demand get stronger and stronger. And I firmly believe that the commercials will not be able to escape this record naked short position that they have both in gold and silver without having to cover it like they did in 2011. Well, it remains to be seen, but really it doesn't matter what happens on the COMEX. What matters is that any attempts to push prices down with these fundamentals out there are just going to cause physical demand to explode.
Andy Hoffman of milesfranklin.com. You can buy precious metals at Miles Franklin. If you go to their website, you'll see there's also an offshore storage program. Go to events, and you can either use a clickable link or just email Andy at ahoffman, milesfranklin.com. And please, we're a week away. Let's meet in Houston at 6:30 p.m. At the Houston Marriott West Loop by the Galleria Hotel. Look forward to meeting everybody in Houston and hanging out with you guys for the whole evening. I look forward to seeing you and Andy Schechtman as well, Andy. Again, thank you so much for your time.
Same here.